Good morning, good morning, good morning. This is the morning, this is not the morning blast. Well, I suppose it is. This is the morning blast from myself, Ryan, and of course, Michael. Usual caveats apply. Nothing discussed on this podcast is trading or investment advice. Nothing, do your own due diligence. I'll be honest, I'm not feeling great this morning. Michael, how are you?
Well, very good morning, Ryan. Good morning, everyone. I'm all right, actually. I'm not doing too badly at all. That's certainly sounding in better shape than you, that's for sure.
Yeah, I put it down to lack of experience.
Lack of, dare I ask, with what?
Well, and that's, first drink in a week last night.
Oh, I see. You're sort of out of practice.
Yeah, well, I think so. Yeah.
Well, it's a bit like, running a marathon or doing any sport, isn't it? You've got to keep training to perform at the top level week in, week out.
Like, we can't all be like you, which go every lunchtime as soon as the sun's out and getting on the laugh.
That's a slanderous accusation.
Well, it is pretty true, let's be honest. Speaking of,
should we move on?
Yeah, speaking of going out on the lash at lunchtime, our dear friend Clive Lambert from Futures Techs, a bit of a market update, levels to watch, etc., etc. S&P posted another green candle yesterday. Suddenly everyone's getting a bit frothy knickers about making new all-time highs. The current all-time high is at 7,043. That's in sight of 7,017 as the overnight high. Always well with the bulls. NASDAQ futures that he printed 26,000 overnight, 26,058. In fact, if you're going to be specific, all-time high in that one is 26,399. So a little bit to do with there, but we believe in you. We believe in you. European bourses also held a bid, still bit away from their all-time highs across there. You got the DAX above 24,150 to 200 this morning, so that's another tick for the bulls. Eurostoxx 50, that capped out at 59.34 for now. Above here, we can target 61.03, 62.09. They're the latter being the all-time high. Bund futures, they saw green yesterday and is bid again overnight, so maybe setting up another test of the 129.26 level. Obviously, price up, yields down. Eurodollar and cable both posted green candles yesterday. Eurodollar testing the Fibonacci resistance at 1.1827. Bitcoin posted a small shooting star after failing to sustain a bid above the 74,500 level, which I say every fucking day. Gold, the yellow metal, rallied to 48.70 yesterday, 48.95 overnight is where we finally found some sellers. Silver, now eyeing resistance at 82.14 and 83.07. London copper, green again. Aluminium, London-based aluminium posted a bearish harami. I don't know what page that's on.
What on earth is that?
No,
Has he made that up?
He might have done, but he knows I'll read it. Someone dig out Clive's book and tell me what a bearish harami is. But
it sounds like a sushi dish.
Well, but apparently it held the Marabuzi support at 35.59. So all still pointed higher. Eyeing resistance levels resistance levels from 2022, which are at 37.42 and 40.73 and 50 cents. I think we mentioned that one yesterday. No, I cannot do the shipping forecast next. Studying the live flight. Bread brewed. That's all red again, but still north of Fibonacci Fibonacci support at 91.66. Gas oil set a weaker tone, but still above support of 1,102 and 50 cents. Yesterday's low was 1,109.5, so 50 cents. TTF, European gas, saw red yesterday. It is back below 46.53. Pointed lower for now, gets used to new extended opening hours. No one's trading at the extended hours. It traded 1,000 lots overnight. Bid offer spreads only becoming workable after the traditional 7 a.m., which Clive is very happy about.
And also, it kind of reinforces what we were saying last week, that ICE are basically doing this for marketing. No serious market participants are actually going to engage with it.
Yeah, exactly. From like 10:50 to 7 a.m. only 1,000 lots trade. EU carbon markets finally 55 got up to 75.20 yesterday, so the balls are getting a little bit noisier there with 74 being well, being given a good going over, apparently.
Oh, matron.
Well, this is why I double took. I was like, hang on a second, is he winding me up? But there we go. Clive, how did you go much?
Very good. Are you done?
Yeah.
Right. Well, you can go and have a lie down, Ryan. I'll pick things up. Thank you, Ryan. Thank you, Clive, as always. Yeah, it was another risk-on day for markets yesterday. The S&P future, as Clive alluded to, trading north of 7,000 once more. We've obviously wiped out all of the conflict-related losses. We've also seen a number of Asian equity markets overnight wipe out their conflict-linked losses too, and a similar kind of theme in the foreign exchange space as well. The dollar is now basically back to where it was at the end of February. If you look at the euro, if you look at cable, they are pretty much all where they were this time kind of 6 or 7 weeks ago. So the market continuing, as we said yesterday, to kind of look at this light at the end of the tunnel, continuing to focus on the direction of travel being towards some sort of peace deal being agreed. We had a number of comments on that front yesterday, a whole host of media outlets again reporting that the US and Iran could be taking place in further talks either later this week or early next. We also heard from President Trump himself, who in a media interview said that these talks could happen over the next 2 days. So certainly something to keep an eye on there. The market very much in the mindset that we are moving towards peace and we are moving away from the risk of re-escalation. And that's certainly helping to underpin risk appetite for the time being. Of course, focus also on the US blockade of the Strait of Hormuz. US Central Command, or CENTCOM, they said that no ships made it through that blockade in the first 24 hours. And we also had reports via Bloomberg yesterday that Iran is, this is according to people familiar with the matter, that the Iranians are considering what they were calling a short-term pause to shipments through the Strait of Hormuz to, as they framed it, avoid testing the US blockade and potentially scuppering a fresh round of peace talks. Go on.
No, I'll just speak.
Oh, I was going to say, but we have actually also had some headlines this morning alluding to the potential that an Iranian tanker has actually made it through that blockade. So certainly something to keep an eye on there. Also, in terms of yesterday, before we move on, just a few other bits and bobs that are worth mentioning that don't involve the Middle East, thank goodness, because, I think we're all getting a little bit bored of that, to be completely honest with you. On the trade front, Treasury Secretary Scott Bessent was giving an interview yesterday. He said that tariffs imposed by the US could be back at their previous levels by July. This is effectively confirming what we already knew. So, of course, the IEEPA tariff authority, that was struck down by the Supreme Court in February. The Trump administration putting in place these Section 122 tariffs, 15%, 15, for a period of 150 days. That period expires in the middle of July. And basically what the administration are trying to do between now and then is find other parts of trade and commerce law in the United States that they can use to basically implement the same overall trade policy. Very much Bessent just kind of confirming what we already knew on that front, but does give a little bit of clarity as to what's going on there. He also said that he doesn't see a big risk from President Trump's trip to China, which is currently due to take place in almost exactly a month's time, although that is still yet to be confirmed. We also had some comments on the monetary policy front yesterday as well. Firstly, ECB President Christine Lagarde, she was saying that the ECB is in a good position to respond to developments. She also said that it would be a mistake to say that the ECB need to look through the energy shock, but that it is too soon to make such a conclusion. So I'm not entirely sure how she can say it's a mistake and too soon to draw any conclusions, but that's the ECB for you, I guess. Money markets continuing to price around about a 30% chance that the ECB deliver a rate hike at the April meeting, which is in about a fortnight's time. But by the end of the year, the market is continuing to discount 2 rate hikes from the ECB, 55 basis points in the curve by year end. And also just on the monetary front, Fed Chair designate Kevin Walsh, of course, he was nominated at the end of January. He is due to take over from Jay Powell a month today. His Senate hearing has finally been scheduled. That's going to take place next Tuesday, the 21st of April. However, Senator Tom Tillis is still planning to block that nomination as a result of the ongoing legal case involving Fed Chair Powell and the DOJ investigations. So although Kevin Walsh will have his hearing, it's unlikely that that nomination is going to make its way out of the committee. Nonetheless, it is going to be very, very interesting to see what Kevin Walsh has to say, because it is actually the only, well, certainly the first time we've heard from Walsh since he was nominated to the job. And actually, I think it'll be the first time we've heard from him in about a year or so. So his views on, firstly, the current economic landscape and also what he might do when he gets the job are going to be very, very interesting indeed.
So you say since, well, at least this year. So is he not given any speeches at all? Nothing?
There's nothing that I could find. I did a sort of search of some Bloomberg headlines. Certainly no remarks have been made this year. I believe the last time we heard from him was April of last year, or around sort of spring last year. And it was basically a sort of lecture that he was giving. But of course, not only was the economy in a very, very different place at that point, which kind of goes without saying, he was also at that stage not really even thought of as being in the running for the job. So it was purely an academic lecture at the end of the day. Yeah. So, the market has kind of assumed 2 things. One is that Kevin Walsh is going to be a dove because Trump has appointed him, and Trump wouldn't appoint someone who doesn't promise to cut rates. And I think that's probably a reasonable assumption. The second that markets have kind of automatically assumed is that Kevin Walsh wants a smaller Fed balance sheet, because that's what he was advocating for when he was last at the Fed during 2008, 2009. The issue is we don't know whether those assumptions are correct or not. Yeah. So, I think it will be very, very instructive to hear what Kevin Walsh actually has to say, because we could all be barking up the wrong tree here.
Well, very, very, very possibly, as we normally do.
Well, the other thing I would just say on the monetary policy front is we also, while we're on the subject of weird things central bankers say, we heard from external MPC member at the Bank of England, Catherine Mann, yesterday. She was talking about her policy outlook and her sort of monetary policy making methods. She said, "I must be active in my response," which means either a big rise or a big cut or a long hold. Thank you for that. That really fucking clears things up.
Cheers. Yeah, thank you so much, darling.
So rates could go literally anywhere, according to her.
Well, yeah, at least it keeps us on our toes. That's the feeling.
There is that, I suppose.
But speaking of what's going on in the world at the moment, so I think officially day 46 of the Thunderdome, also Operation Epic Fury. This being fair, the 2-week ceasefire that was brokered by Pakistan, that is still holding. Surprisingly, well, for most people. I say this whilst we're going to whilst we're on air, it's holding. God knows what's going to happen in an hour's time. What's your thoughts on the way the market's behaving? Because obviously, so far so good. Obviously, we've had a couple of ships go through this. I'm doing air quotes so no one can see me, but I'm doing air quotes saying that blockade. What's the vibe? What are you thinking?
Yeah, I mean, I think the first thing is it is a positive that this 2-week long ceasefire continues to hold. We are a week into it now. I think there is also an increasing consensus that, yes, there are clearly talks taking place in various ways between the US and Iran. But I think there is also an increasing view that even if those talks weren't to reach a deal by the end of the ceasefire, it seems more plausible at this point that the ceasefire gets extended as opposed to we go back to, major kinetic action. That seems to be the kind of calculus from financial markets at this point. And as you said yesterday, when you were in a slightly more compos mentis state, the market is kind of looking at that light at the end of the tunnel and rushing to price that in because, nobody wants to be the one waiting for confirmation of that good news, and that's when they try and buy the dip, because already they've missed 700 points off the lows in the S&P.
Exactly that. And this is why, we always talk, and me and you are on the same kind of mindset, that for markets to go sideways or down, you need increasing amounts of bad news. Markets naturally want to go higher, right? And
certainly equities.
Well, this just assume that that's what I'm talking about at the moment. And this is what we're saying right now. Like, there's no negative news coming out. I say no negative news. There's no horrendous headlines coming out of the Middle East. Therefore, equities grinding higher.
Yeah, and that's not to say, of course, that there aren't, issues on the horizon, because, of course, physical energy supply continues to tighten. I think JP Morgan had a note out either yesterday or over the weekend saying that a lot of the final shipments that made it out of the Gulf before the conflict started are now sort of reaching their destinations. The other thing, of course, to bear in mind is that, and we were having this conversation on the desk this morning, there is still a very, very big question around, what damage has all this caused? We have dealt with, 7 weeks now, effectively, of crude trading at $100 a barrel, give or take. And, we are still unaware as to the exact inflationary implications of that, unaware of the exact growth headwinds that will pose, et cetera, et cetera. So, I don't think we can reasonably sit here and say that, the economy is out of the woods and the markets are out of the woods. That's not what we're saying. But I think, you need to think about the dynamic that we've been trading on. And it's basically, is it war or is it peace? That's kind of the spectrum that participants have been using. And right now, we're very much at the peace end of that. And it makes sense why markets would subsequently rally.
Well, quite. Although I hate the binary peace or war, but no.
Yeah, I mean, it's obviously more nuanced than that. It's just an easy, slightly lazy way to frame the argument.
Yeah, exactly that. Have we got any data out today?
Yeah, there's a few bits and bobs. I would say I don't think any of it's going to move the market too much. 10 o'clock this morning, we get the latest industrial production figures out of the Eurozone. Production seen rising by 0.3% on a month-on-month basis. This is February data, though, so actually I'm not even going to bother reading it. It's pointless. It's too stale to matter. Slightly more current than that is going to be the Empire manufacturing numbers that we get from the States. This is April data. The index expected at 0 compared to the prior of minus 0.2. Besides that, there are another ton of speakers on the docket today. Of course, the IMF World Bank spring meetings continuing in Washington, D.C. Again, not going to read out all of them, but we are due to hear from ECB President Lagarde, BOE Governor Andrew Bailey, who will be speaking twice. Hooray. The SNB Chair Martin Schlegel and the RBNZ Governor Anna Brayman will also be making remarks. And in addition to that, the Fed are releasing their beige book of anecdotal economic evidence at 7 o'clock this evening. And also do just bear in mind that earnings season continues on Wall Street today. Actually, it's just worth noting we did have a bit of a mixed slate of bank earnings yesterday. Wells Fargo delivering misses, top and bottom line beats, but a miss on net interest income and net interest margin. So their shares came under a little bit of pressure. JP Morgan, they beat on pretty much everything, but they downgraded their net interest income guidance for the year ahead, so they slipped on the back of that. Citi, meanwhile, they reaffirmed their guidance and also delivered top and bottom line beats with very, very strong trading revenues in the mix as well. They traded about 1% higher yesterday, and bank earnings season is rounded out before the market opened today, firstly by Bank of America and secondly by Morgan Stanley. And of course, their earnings will be in focus, but also the commentary and any guidance that they provide around them as well.
Exactly that. Nothing more to say, thankfully.
You've made it. Well done.
Oh mate, I am so proud of myself. Listeners, thank you as always for tuning in. What day is it? Is it Wednesday?
It's Wednesday, right?
Yeah, so it's not Friday. So we'll see you tomorrow. Take care.
We will indeed.
Take care. Much love. Love you. Bye.
Bye.
Bye.